Welcome back to our earnings analysis. Bank of India's first quarter numbers was impressive for the very minor fall in net interest margins, just 6 basis compared to what 25, 35 that others have reported. It's also a fairly decent 32% rise in net profit. But the bank's cost to income has risen quite sharply from quarter ago, from the fourth quarter. For more, we are joined by Mr. Rajneesh Karnatak, the Managing Director and CEO at Bank of India. Good morning, Mr. Karnatak. Thank you very much indeed for your time. Well, first up, if you can take us through this margins picture. It's not fallen much, but at 2.5, 2.55, you're already lowest among banks. You're saying you will bottom out this quarter? You don't expect Q2 margins to be lower than Q1?
Yeah, thank you, Latha ji. Thank you for having me here. First of all, as far as the margins are concerned, I would say that, yes, we have bottomed out at 2.55%. If you see, it has come down by 6 basis points on a sequential basis, from 2.61 to 2.55. At the backdrop, it is the net interest income which has come down. So if you see the net interest income, our interest income has gone up by around 8%, and our interest expenses have come down. It has gone up by, in fact, more than 15%. So the net interest income, there is a minus of 3%. However, having said that, I would say that we have, the net interest income is flat at around 6,000 crores. So it is bottomed out in this quarter. We are saying this because of the fact that the repo rate impact, whichever is there, which we have already taken. So 1% repo rate cut, 60% of our loan book is the repo book, which has already been repriced.
No, 1 minute, sir. 1 minute. Less. Mr. Karnatak, just a minute, sir. You know, the second rate cut came in June. Could you pass? I mean, your EBLR, external benchmark linked, is quite big. It's 59% of your book. So it won't impact on your returns in Q2?
So in Q1, the first cut had come 25 basis point in February. The second cut of 25 basis point came in the month of April, and the next 50 basis point cut came in the month of June. You are very right that the last 50% 0.50 cut has come in the month of June itself. But nonetheless, even 50 basis point cut, which the full impact has been taken in the Q1 quarter, normally 25 basis cut impacts the net interest margins by around 7 to 10 basis point. So 50 basis point cut impact was there for the full quarter of Q1. So that is what is the point that I would like to make. And on the liability side, the repricing takes some time. There is a lag in the repricing on the liability side. So we have already cut our saving deposit rates. We have already cut the fixed deposit rates. But the final impact on the liability side, on the interest expenses side, would be happening in the Q3 and Q4 quarter. So that is why we are saying that the stabilization of the NIM should be there from Q3, Q4 quarter onwards. And we feel that this 2.55 is bottomed out for us.
Okay. So, you know, most of your peers, like, you know, even smaller banks like UCO or larger banks like BOB, are all managing at least 2.9, 2.95 in terms of margins. What holds back Bank of India? Will you aspire to those higher margins anytime soon?
Oh, yes. If you see our book, there are two parts in that, Latha ji. One part is with respect to our global book. If you see, 15% of that global book is the international book. So whichever bank has a significant international book also, their global NIMs are compressed on a lower side. So that is one of the basic reasons why our global NIM is 2.5. If I give you a color on the domestic NIM, there our domestic net interest margin is somewhere around 3%. In fact, it is around 2.9% at around our domestic NIM also. So because of the international book, the global NIM comes down. But nonetheless, we are very confident with the coming quarters, the NIMs should improve.
Okay. Well, let me come to the slippages. It's a very impressive number. Your credit cost at 68 basis is absolutely not a problem. But if I look at your SMA2, it's a little worrying. It has risen to about 4,400 crores, almost 3 times what it was a year ago. SMA2 means, you know, you're just a few days away from NPA. Should we worry that NPA can rise in Q2?
Yeah. So if I give you a color on the SMA book, you are right that in the corporate book, particularly the SMA2 book has gone up. So the SMA 0, which was there in June 24, has now gone to the SMA2 number in the corporate book as far as that is concerned. So majority of the SMA2 book is there, which is the corporate book. And these are predominantly 3 or 4 state public sector accounts, which are under the SMA2, but the present understanding that we have, these are all consortium accounts. None of them is a sole banking account. And the present understanding that we have is they should not be slipping into the NPA category. They should continue to remain in SMA2 or roll backwards in the coming quarters.
Okay, that's good to hear. The only other thing that we had about doubt we had about your asset quality is that there are not enough upgrades and the write-off is a bit too much. Will that change? Will we be able to see more recoveries and fewer write-backs, fewer write-offs?
Yeah, so if I tell you the bigger picture which is there, in March 25, we had a gross cash recovery of nearly 9,500 crores.
Yes.
This year also we are targeting the same run rate of gross cash recovery of around 9,500 crores, and this does not include any write-off. So any write-off which is excluding that. So with that kind of number, and this quarter also, our gross cash recovery was more than 2,000 crores. In fact, our reduction in the NPA book, if you see in the outstanding, is more than 4,000 crore. 2,400 crore contributing through write-off and 2,100 crore is the gross cash recovery, which is more than the fresh slippages which have happened. In fact, equaling to the fresh slippages. So gross cash recovery should be at the same run rate of around 9,500 crores in this financial year also.
Okay, and my final worry was on MSMEs. Would you worry that your growth of MSME loan book has been fairly robust? It is in high teens. Will there be more slippages in that? Is there any sign? Because I think in SMA2 you are indicating that SMEs are there. There is a worry, but the bigger worry is in corporate SMA2.
Yeah. So as I said, at the cost of repetition, I would say that we are not much worried about the SMA2.
Yeah, I got that. Yeah, they are state institutions.
Correct.
But MSMEs, correct. Would you worry?
Yeah. So as regards MSME is concerned, you are right that we have grown on a YOY basis by more than 17% in the MSME book. However, the collection efficiency got impacted in the MSME book in this quarter, definitely. And if you see our fresh slippages of around 2,000 crore, nearly 30% of that slippage came from the MSME book. To give you a further deep dive into that, I would say that MSMEs up to 20 lakhs what the slippages, maximum slippages where it is happening. So it is the small ticket MSME book where the slippages are happening. That is a bit worry for us. And for that, we have improved our collection efficiencies and more of monitoring is taking place. And some guardrails also we are placing as far as the underwriting is concerned. And going forward with the busy quarters happening in September, December, we feel that this fresh slippages in the MSME should also come down in the ensuing quarters.
That's very good to hear, sir. Thank you very much, Mr. Karnatak, for joining us. The street is clearly noticing what you have said about the SMA2 book, as well as your NIM forecast that you've bottomed out and the stock is up 2.8%.